Thank you all for joining us on our third coffee talk about fintech trends. My name is Ana Maria Romero, and I'm the corporate business lead for the Costa Rican Investment Promotion Agency. Before starting, I would like to remind you all to bring your cup of coffee and enjoy today's talk, which we will have the participation of three amazing speakers from Mastercard, Nimiq, and Ebanks. I would like to remind our audience that you can post your questions on the bottom part of your Zoom window in the Q&A section. That's it, and let's start with our coffee talk for today. So 2020 and the first months of 2021 had been, many of the industries have suffered major disruptions and had to adapt to many different industries to the new normal. We have witnessed global shifts for more digital transactions accelerated by e-commerce, contactless purchases, and new payment methods. To have just a sense of what happened in Costa Rica, only mobile money transfer transactions increased 700% in only 1 year, which represented around 55 million transactions only for Costa Rica in 1 year. This has increased the use of digital contactless payments, less use of cash, financial inclusion, and the adoption of new ways of payment such as digital currencies. I have three guests with me today that will walk us through this transformation, share their views on these accelerated trends and the opportunities that have arisen with them. First, I would like to introduce Marcela Ledesma, a Strategic Payment Partnership Manager for Central America and the Caribbean for Ebanks. Marcela, thank you for joining us, and please share with us briefly what is Ebanks.
Thank you, Anna, and thank you for the invitations. Ebanks is a fintech. Is a company that offers payment solutions from Latin American to global websites. Through Ebanks solutions, these global websites can offer payment methods like cash vouchers, debit and credit cards, local e-wallets to the Latin American consumers. But basically, we put together all these kind of payment methods to try to accelerate and embrace all the needs that the Latin American needs to buy online.
Thank you, Marcela. Also joining us today, we have Jeffrey Esquivel, blockchain core developer at Nimiq. Welcome, Jeffrey, and thank you for joining us. Jeffrey, please share us very briefly what is Nimiq.
Thank you, Anna. Yeah, Nimiq is a cryptocurrency. It's a browser first and payments focused cryptocurrency. But we like to think about it as like cryptocurrency for humans. So that means that besides the technical aspect, which is of course very important for what we do, we also care about the human aspect of it. So we care about accessibility and making sure that everybody is able to use our systems. We also care, for example, about the ecological aspect of what we do and the impact that it has. So that's the most important part.
Thank you, Jeffrey. Finally, we have Thiago Diaz, Fintech Strategy and Labs Vice President for Latin America and the Caribbean for Mastercard. Thiago, thank you very much for joining us today on our third coffee talk. And please share with us your role at Mastercard in the Fintech space.
Great. Thank you, Anna. Thank you, CINDE, for the invitation and the opportunity, and also for the coffee time, right? So I think I don't need to describe, Mastercard as a company. I just wanted to highlight that, our main goal is to basically displace cash and drive a more efficient economy across the globe. My role is leading the fintech strategy and also the labs initiatives, which is our core pillar on innovation for the Latin American Caribbean, where we basically bring all the existing global programs and bring them to life and offer them to the three big categories of companies that we engage with. So the first one, paytechs, the ones that are going directly to consumers, to a small business, basically issuing cards and deciding the brand. The other pillar is on enablers, so issuer processors, being sponsors, program managers. They basically enable payments across the region. And the last is what we call value-added services, so startups that solve pieces of the puzzle for fintechs.
Thank you, Thiago. Very interesting. So to start our coffee talk, I will ask our audience to please answer our first poll question from this coffee talk. So a question will pop up on your screen, and please, you have 30 seconds to read the question and give us your answer. Great. Thank you all for your participation. So to give you an idea, the correct answer for this banking penetration from banks and fintechs is 70% in Latin America, which is a very high number. And it actually opens doors to many opportunities to just not only fintechs, but specifically for the payment industry. So I would like to start with Marcela and Ebanks. And I wanted her to share with us a little bit of what has been the main changes the company has suffered during this last year, and what are the new demands from the new users, and also if you can share what are the challenges and opportunities that you're facing given these new changes and transformation. You're on mute, Marcela.
Sorry about it.
No worries.
It's like payment industry has been changing a lot. Transformation, digital transformation. Last year we suffered. I think all the industry suffers because we're not prepared for accept like a payments online. Understand clients' needs. Understand that all the shops and all the commerce were closed. So it was accelerate very much all the digital transformation industry. In this case, in what we do, like in Ebanks, we accelerate this. We understand needs from the clients, and we try to work together with the whole ecosystem to provide this kind of payment gateways. To understand what is that, a payment gateway is like a backend service processing payments online transactions. It was not just processing the credit and debit cards. We understand that clients needs and start to use another payment methods. In the case, like Ebanks is a Brazilian fintech. We saw that the central bank from Brazil, they start to do like a huge innovations. They start to use Pix. Pix is a kind of service that they can provide to all the people in Brazil, different kind of services and different channels to can pay the services and products to the industry. In this case, like it was challenging for us because one of the main challenges was the first impact for the COVID-19 crisis that closed many of the industries. We saw the challenge in some of our clients, like as a travel industry, that they were like just close all the gateways, they closed the airports, and we saw this challenge to see how to innovate and how to help these industries. From the opportunities, we saw a big increase in clients that start to use the digital goods and services. Like we saw these two kinds of challenges and those two kinds of opportunity for our clients. In the Costa Rican ecosystem is maturing as a Latin American, so we will see more and more companies looking for software as a service solutions, offering to this access to these products.
Thank you, Marcela. Now I will turn it to Tiago. Being such an important player in the payment industry for many, many decades, what has been the shifts in the strategy last year? How has the company reinvented itself through with the whole online e-commerce and contactless payments? What has been those shifts? And also from the answer from the poll, what is your takeaway on that, on what this penetration in the banking system in the region?
Sure. Let's talk first about the 70%, right? Because it can be a little bit controversial. I saw, a high rate of answer on the 50%, because the normal number that we all see from World Bank is around 50 to 55% bank accounts penetration. But a recent study coming from America's Market Intelligence now added to this number around 33% of the population with a digital wallet or a fully digital bank account, like Wallace of the world, Nubank, C6, and many, many others are now being taken into consideration in that number. 50% out of them, out of the 33%, are also or already banked population, meaning we now have 55 with additional 15 to 16. So the total number is around 70. And there are two big effects, right? The fast pace of growth of these customers and players that I just mentioned, like Voila, Nubank, Superdigital, Mercado Pago, PagSeguro, and many, many others across the region. But on the other side, there is also the acceleration due to the COVID itself, because of the government emergency disbursements, like Corona Voucher in Brazil, that included 36 million people into a digital environment that were kind of required to download an app, to open a digital account, and then to use the balance in many different aspects, right? This piece leads us to the second piece of the conversation, which is the strategy, right? So in one hand, we see that there was not a big shift in terms of the digital and e-commerce transactions. So we were already with a clear agenda on introducing contactless payments across the region, not only the region, but globally, as well as enabling debit to transact online, right? And many of the tools and platforms and services that we offer, such as 3DS 2.0, MDES, and Click to Pay, and many others, were already in the agenda. So in that sense, what we saw was a huge acceleration, right? So 45% more sales on the online channel, 41 million unique users only on the first half of last year that were now introduced to a digital environment. So this was a big hit for us. Obviously, challenges such as the ones that Marcela mentioned, right? Lower approval rates and also increasing fraud, demanding more and more intelligence and layers of protection with new types of fraud, new types of attacks. So this was one, no shift on the strategy, just an acceleration on the way we deploy and the amount of volume that we got from this consumer behavior shift. On the other side, it's impossible not to mention the T&E and cross-border, which is a key component of our business. So with the globe locked down in their respective countries, you can imagine that we had a big impact on that. So in that sense, we are now creating new and different offers to our customers. So example, how can I allow a customer to visit a museum in a virtual environment instead of offering priceless experiences in person? So we had to run also a big shift in that sense. And most of our platforms are already adapted to serve and to bring experiences to our customers in a more digital environment.
Great, great. So definitely a huge transformation, more access to probably companies that were not digital or had to move very fast into an e-commerce platform. So both companies were able to actually provide the services that the probably companies that are not traditional on e-commerce that had to move very fast to e-commerce were able to do it. So thank you very much for your insights on that. Another area that we are seeing is the increase of non-traditional ways of payment. So people are looking into other ways of payment, and we're seeing a rise of the use of, or the interest in cryptocurrencies. And so we wanted to touch a little bit on that, because I think there's, with the latest events and companies announcing their investments in cryptocurrencies or accepting cryptocurrencies, Tesla, Expedia, PayPal, and so on, getting into cryptocurrencies. I would like to ask Jeffrey a little bit to walk us through this topic specifically, and how this has been growing, and specifically sharing with us in a nutshell, what are cryptocurrencies and how this is changing the whole dynamic of the payment system, and how do you see this changing?
Yes, thank you. Well, cryptocurrencies are basically, as their name implies, a new kind of currencies. They didn't exist before, and they couldn't exist before because they depend on new technologies such as advanced encryption, cryptography, and the internet to be able to work. Basically, the main difference between them and like regular forms of currency is that they are not controlled or issued by a central authority, such as a central bank, but they are actually controlled and issued by a network of people, of individuals. Most of them basically run a software. We call it a node on their computers, and that allows them to validate or participate in the network. Maybe to illustrate this, we could use the slides that we have right now on screen. So when we have a regular transaction in the regular world, right, and we want to send some, let's say, some money to our friend, what we will do is that we will send the transaction to the central entity, maybe a bank, or maybe let's say a card processor. That entity will validate the transaction, will make sure that we have enough funds and that we are who we say we are, right? And if everything is okay, then the transaction will be approved and the funds will be moved to our friend. In a cryptocurrency environment, what we will have is that actually, instead of having the bank or the central entity, right, what we have is this peer-to-peer computer network, which is what you can see right now in the slide. So it fulfills the same function as the bank, right? So we will send a transaction. This peer-to-peer network will be validating the transaction, again, making sure that we are who we say we are. It does that by using cryptography. And then it will also check that we have the right amount of money so that we can transfer that. It will do that by a consensus mechanism. And if the majority of the network, and this is important because we have a lot of people here, it's an open network, so anybody can run a node, and some of those nodes may be malicious. Some of them will try to, like steal money or create money out of the blue that they don't actually have. So the majority of the network will be checking. All of them will be checking, and if the majority comes to consensus, that's what happens, and that's what prevents, like fraud in a cryptocurrency system. So yeah, this is a bit of how cryptocurrencies work. Of course, this is a very simple explanation. It's a bit more complex underneath it, but that's the main idea. Regarding how things have changed because of cryptocurrencies, well, I think there's a big change going on underneath this whole, underneath all of the cryptocurrencies themselves. There's also this technology called blockchain, which you may have heard too. Blockchain is very interesting because basically it allows a set of parties that don't trust each other to come to a consensus on something, right? And it can be used not only for like currency transactions or money transactions, it can be used for a lot of things. So for example, I know there's currently companies that are testing stuff like, for example, trying to record on this blockchain the stocks of a company. So in the future, or the shares in the future, we may not like buy and sell stocks by going to a stock exchange, but we may just do it directly on a blockchain in a decentralized manner. There's also countries that are experimenting with allowing the register or the registry of property to be on a blockchain, and then people will be able to sell and buy land directly from a blockchain instead of from a centralized institution, right? Or and then there is another point, the fact that cryptocurrencies themselves are also investments. So for example, Bitcoin, which is the most famous one, and Nimiq, both of them have a limited supply. So people know that there will never be more than a set amount of them. And people think, a lot of people think that's actually a very good investment because there's no inflation there, no inflationary risk. So that's also something that's changing on the investment side of things right now because of cryptocurrencies.
Thank you, Jeffrey. Before I pass it to another of our speakers, I would like to invite our audience to actually put your questions on the Q&A box on the bottom part of the Zoom screen so that we can reach the dialogue with our guests today. So please share all your questions. We will be happy to share them with our guests today, okay? So talking about cryptocurrencies, we know that I would like to turn to Tiago and Mastercard, because recently we have also seen that Mastercard has sort of announced their interest in starting to develop products in this area in cryptocurrency. So please, Tiago, share us what is Mastercard's approach to crypto and what are the products around that?
Good, perfect. So it was a really good explanation coming from Jeff to clarify how it operates. On top of that, I think, just a quick overview on the different types of cryptocurrencies or digital assets. We want to work really close to what we call CBDCs, right? Central bank digital currencies, basically digital currency issued by a central bank that is usually used to disburse benefits, right? As well as stable coins. And there is a reason why, because we have three key principles on the way we operate and explore different opportunities with digital assets, right? The first one is what we call stability. So, we strongly believe that for a cryptocurrency to be suitable for payments, it needs to provide reliability and assurance, right? Starting with greater price stability. So as a merchant, I would not love to, sell a good for 0.001 Bitcoin, and when settling this transaction, the same amount of Bitcoin worth much less or even much more, right? So this is a key mindset that we have, and that's why we're exploring much more on the stablecoin side. Also, a key component of our core franchise principles, full compliance, right? So we want to be really close to regulations, to whether they are permitted as a medium of exchange, and they are following strict QIC and AML compliance, right? So we want to make sure that consumers at the end, as a third pillar, they have strong protections. So guaranteed payment, all the collateral structure we create as part of our core with a defined value, and also protections against fraud and theft. So this is how we want to operate. To the use cases, right? We have two big use cases. The first one is our collaboration work with Island Pay in Bahamas, attaching the recently issued CINDE, which is a digital asset, a CBDC issued by the government, by the Central Bank of Bahamas. And Island Pay is the digital wallet in between, allowing people to receive, to check the balance, and then to convert this asset into the local currency and then use their Mastercard prepaid card. So this is what we call crypto card program, to enable exchange and the use of stable coins in the network, but always in local currency. The second one, which was globally announced a couple of weeks ago, is something that we are working right now in the first half of this year to pilot and to define the partners, and then to really go into production in the second half of this year, which is how we enable the full network to adopt new digital currencies, but again, focusing on stable coins like USDC or Paxos as two examples.
Mm-hmm. Perfect. So definitely a lot of things developing, I think, with the explanation of Jeffrey on how cryptocurrencies work, and then Mastercard and big players actually implementing and starting to see it as an opportunity. We will be talking more about cryptocurrencies and how this becomes a way of payment for many others, and how we can use it on a normal basis. So thank you, Tiago, for your explanation and giving us a brief on how Mastercard is looking at that. Another big trend that goes, we've talked about transformation, how this whole pandemic has changed the way we buy, the way we pay. Now cryptocurrencies coming into play. Another big area is democratization and the access to technology. So definitely one of the biggest trends that we saw, and actually we spoke about it on our last coffee talk with the Accenture Technology Vision 2021, they highlighted that democratization and access to technology, it has been one of the trends boosted by the pandemic and will continue to raise or accelerate. So Thiago, again, how has this democratization, how Mastercard has seen this democratization of technology and how giving access to others in terms of access of payment, fintechs, and also even in cryptocurrency actually as well?
Sure. So there are many angles on this question because digital transformation and accelerating and embracing changes, it's a complex topic and it's part of a broader strategy. But I wanted to frame in three big blocks, right? The first one is what we call the multi-rail strategy. So as most of you have been seeing, we've been acquiring some companies in the last 5-7 years that are helping us to add more and more value on top of the traditional card rails. So like VocaLink with ACH capabilities, like Finicity with open banking features and a huge coverage in the US. So this is getting more and more normal across the company on addressing and assessing different use cases and tapping different flows. So to Jeff's point on blockchain, a good example is our collaboration with a company called GrainChain that we provide a blockchain solution called Provenance that allows farmers to digitize the full flow of the moment they are planting the seeds, harvesting, selling, and setting prices to middlemen and going all the way down to someone's table. So when you are at the restaurant, you can just scan a QR code and see the full track of what happened with the seed down the road to your table at the restaurant. So this is just one example that is way beyond a payment flow. So there are all the components about metrics, productivity, smart contracts, enabling payments in the right moment, negotiation, all of these under this platform. So this is one example of multi-rail strategy. The other one is specifically touching the fintech space, right? So if we were here maybe 2 years and a half ago, I could tell you that for any fintech to launch a new card in the market or a new Mastercard program, they would take around 12 to 15 months. Today, we are more than proud to say and talk to our customers saying, look, through the power of collaboration, connecting paytechs, enablers, and value-added service providers, and Mastercard playing this orchestrator role, we are now able to launch new programs to the market in a matter of weeks. So there are many examples of fintechs that launched cards with us in 4 weeks, or even fully licensed entities that got a license and implemented a new portfolio in around 50 to 60 days. So this is way much simpler, streamlined, and clear for how we embrace the change and how we support fintechs in the way they change the world, right? So I think this is a second aspect on creating a well-developed infrastructure environment to enable how they operate. And the third one, I think it's related to services, right? So Mastercard is well known by its Mastercard Advisors business unit. We are now naming it DNS, Data and Services. And we've been working hand in hand with our customers to help them innovate, co-create, and launch new solutions in the market. And this is growing even faster than the core business, right? So we are shifting this company to a truly beyond cards and focused on services global company.
Great, Thiago. So if I can summarize, I think when we talk about democratization, definitely there's a lot of collaboration, adding value to your customers, access to different banking products, not necessarily the traditional banks, but others, and also all these advisory and services that you can provide to your merchants in order to have access to the different Mastercard products and be able to use technology. So thank you. And I think I will also like to go into this topic with Ebanks, with Marcela. Actually, specifically, how has Ebanks contributed on this democratization? I think Like I mentioned at the very beginning, we saw non-traditional companies actually entering or having to access e-commerce in a very fast way. So how has Ebanks also supported this democratization of technology for payment systems?
Of course, that, Anna, for us it's very important understanding what is the democratization, because it's to understand how clients are consuming products right now in the e-commerce platforms. Also, which kind of methods of payment they use to can access to these kind of products and services. For us, payment solutions is a vehicle for access, fostering the acceptance for local payments methods as a vehicle for inclusion of millions of Latin Americans to a global commerce. That means 2 points, as Thiago mentioned. Access, that we understand that even the ones that do not have a bank account can access to the best products and services from anywhere. And this is very important, like in our countries, people used to have a lot of methods of payments, maybe are bancarized or not bancarized. So in this case, in not just for American Latina consumer, but also for business to realize the full potential for Latin American markets. This is very important. And the second one is to have more options. People try to understand how they can pay. If I don't have a bank account, how can I pay? We saw in the case in Costa Rica that CINDE, that is the method that people translate the funds from account to account, increase a lot. And this is a kind of to understand which methods we have in each country, in which one we can accept as a payment method. So the ones that don't have these bank accounts can choose how they prefer to pay, in which their credit or debit cards. If they want to generate a cash voucher, that is very common in other countries, that we are going to accelerate in our countries in Central America and Caribbean region, and pay through internet banking. Those are all these kind of payments that they can democratize the way of the people can access to these e-commerce platforms. Banks also have been increasing how they give access to translate person-to-person money. This is simple in the case of Costa Rica. These vouchers that if I don't have any bank transaction, I can do my voucher and pay in these platforms. So or even the e-wallets that we have see that have been increased a lot, the use of these kind of payment methods. So in this case, in the case of Ebanks, we have to try to understand all these kind of ways that the people used to pay or used to have access to these products.
Thank you, Marcela. So definitely Ebanks is playing a role, first understanding what is the scope of what are the means of payment and how people are able to pay, and how you can facilitate this for the people to be able to have access to the different e-commerce platforms. That's what I get from this. So definitely very interesting both of your insights. Before we move forward, we would like to launch our second poll question. So the question will pop up on your screen, and you have 30 seconds to look at the question and give us your answer. So please, let's share the question. Perfect. Okay. Very tight on difficult to use and understand and lack of information. That's very interesting. So definitely, I think one of the key things we're all facing is cryptocurrencies. Sometimes it's very difficult to understand. We don't have enough information. I don't know if I want to invest or go into cryptocurrencies. So definitely, I would like to ask, talking about democratization, I would like to ask Jeffrey more in detail on how Nimiq is actually breaking these barriers between cryptocurrencies and the population. How is it making it more accessible to the people? So Jeffrey, please share with us Nimiq's vision and how you're making it accessible for everyone.
Sure, thanks. Well, basically, as I mentioned earlier, we care about the human aspect a lot, and accessibility is one of those things that we care about. So I'm going to use a couple of examples so that you understand why we say we care about these things. One of them is how addresses work on Nimiq. If you are used to Bitcoin, for example, you will know that their address scheme is a little bit like complicated, and most people don't understand how the address, or they are not used to those kind of addresses. They start with BC1, or it depends on which version of the address. It may be a hex number, decimal number, and that's complicated for most users. In our case, for example, we decided to use regular IBAN addresses. So Nimiq addresses look the same as, any CINDE address in Costa Rica, because we migrated to IBAN a couple of years ago, or any IBAN address anywhere in the world. So when users start using our network, they will not find something weird as the first thing that they find when they want to transact or do some transaction. They will find the same addresses or the same addressing scheme that they are used to. So that kind of thing we care about. We think about those things. It's not just like the easiest way or to do this is technologically is to just have hexadecimal numbers, because that's what they are underneath. But we understand that users don't necessarily want to have that or understand that, or it's too complicated. It will be a little bit more difficult for us on the technological side, but so much better for our users if we do this right. We give them addresses that they are used to. The other example that I wanted to bring is that we are browser first. That means that, for example, if you want to be part of the Bitcoin network, you need to download some complex software and you need to install it on your computer. You need to run it. It will take a few days to synchronize, or maybe more, depending on your connection speed. And we know that most users are not going to do that because that's too complex and they don't necessarily have the knowledge, the technical knowledge for that. In our case, what we have is that you can visit your wallet from your web browser, which is a software that you most likely already have, because most people have a browser. Nowadays, even like Xboxes have a browser, and there's a browser everywhere. And you can connect from your browser directly to the network via what we call like a nano node that is running on the browser. And that way you don't need to download anything or set up anything. It's just there. You just go into your wallet and you will be connected to the network in the decentralized manner. You will be connected to several nodes, not one proxy or anything like that. You will be completely part of the network. So that's another example of how we care, right? We care and we make things more accessible for our users, more simpler for them. And especially we make sure that they are using things that they already know, instead of trying to come up with something new that may be too complicated for them.
Thank you, Jeffrey. Yes, definitely cryptocurrencies is a huge challenge, and I think making it easier will be the right way to go to more people using it. So one of the other topic that we wanted to go on through is security. Definitely last year we were forced, or we were moved towards e-commerce and actually doing payments online, and actually there's a lot of things, and you talked at the very beginning, all three of you, of the security issues that may arise because of this increased use of technology in the payment system. So I would like to get your perspective on how this is changing and how you're securing it for most of the clients. And I will ask Marcela also to share us her perspective from Ebanks on how the security is changing and how customers are could be more aware of this and how this can change. Mm-hmm.
Something that is very important, Diana, is that the behaviors of customers have changed. we used to, in the beginning, when we tried to make transactions online, we were afraid about someone takes the information from the cards, the numbers and codes to try to buy. So I think like last year, force the majority of persons to try online transactions or try an online method to pay. So people don't get afraid about to use these e-commerce platforms right now. Also, like the brands, the banks, and the whole that works together in the ecosystems have been working very hard about the fraud and security. There's many sophisticated systems that we have implemented, and we have worked together as an Ebanks with the brands and the banks to try to figure out how became this fraud and how the security is a very important factor to give to the customers that kind of security to can use these old methods, online methods. So it's very important that we have more and more tools that enable us to protect the security of the information of the payments transactions. And I think like in this case, Thiago can approach more about all the force that all the companies have been doing about it. It is also like we have information about how clients is the behavior of the clients that used to buy online, and that's give us more and more efficient tools to increase this kind of security in all the payments methods.
Yeah, Tiago, if you could elaborate on Marcela's answer in terms of security.
Sure. Let me first add a couple of stats around how fast online sales is growing and grew actually last year. So any report, study, and even using our internal data through a report we call spending pools, we've been announcing and releasing numbers that are always above 50%. Even before the pandemic, the online sales were growing twice as fast as the normal cards industry growth rate, which was in LAC specifically always around 10 to 20%, and online sales always growing like 25, 30%. Last year, if you take June alone, it was 2 times more than June 2019, right? So at a global level, the number that we got is that $900 billion were added to the e-commerce spend. It was not the total, it was added to the e-commerce spend, right? So almost $1 trillion added to e-commerce spend. So all of these naturally leads us to a deeper discussion around how to better protect our customers, right? So one of the key messages that I was trying to send in the previous answer was around this shift from a cards-only company, but much more focusing on allowing customers to choose their payment method and be there to touch that transaction and add value. It can either be through fraud protection, it can go through data enhancement, the way Marcela was mentioning, right? So we have our own data collection, but we could add many more information to create different data products, data-oriented products. But I wanted to cover a specific solution that we've been working a lot in LAC, which we're calling passive biometric authentication. So this is a product of one of the acquired companies that Mastercard acquired a while ago called NuData. The product is called NuDetect. So what it does is basically ongoing reading of signals coming from your biometric behavior, meaning that the way you hold your device, the pressure that you put in the tip of the finger, the side of the hand that you use, the speed that you move from one field to the other this all creates a pool of data that allows us to read whether it's a automated attack, whether it's Ana Romero herself that is typing that form, and increases a lot the ability to authenticate that user is actually the user that is trying to buy goods or services from an online website. So when you think about the full flow of a digital purchase, we approach in that way. So we think about the engagement process by monitoring behavior interactions of the consumer, and then the account assessing the ecosystem. So we want to make sure that when they enter a e-commerce, they log in, it's truly a real person and the person that claims to be. Then identification, when you are at the moment of checkout, right? So we want to review customers' payment credentials, verify the user ID, and tokenize the credentials to protect that number from data breaches and many other data breaches that we saw last year and also this year. And then at the end, allowing issuers or banks to decide whether they want or not to approve that transaction. So we want to score fraud risk using enhanced artificial intelligence models and rules by managing disputes and completing the others seamlessly, right? So there is a question on the chat here. Basically, we've been working hard on how we can make this journey as more backstage as possible, and with the reducing as much as we can on the friction piece, right? So instead of asking customers to every time one-time password or additional password or log into the internet banking, we want to remove this as much as possible by adding intelligence into this flow.
Great. So definitely a lot is going on in terms of security and a lot of traceability of what's happening. I think it's the key message here to our audience and to anyone seeing that and what's happening today in terms of security. So I'm going to jump into another topic because we're coming to the end of our coffee talk, but definitely we see transformation, alternative means of payments, all of these security issues. But this all brings us to 3 companies that have operations in Costa Rica. So this brings us to Costa Rica. So I wanted to take a moment to speak about the country. And I would like to ask Jeffrey, because Nimiq is actually currently in Costa Rica, it has operations here. So share with us what has been the experience in Costa Rica from Nimiq's perspective.
Sure. Well, there are several reasons why we really like being in Costa Rica, but I think there's 2 key ones. The first one is, of course, the talent here. I mean, there's a very good pool of engineers and software developers, but more than just that, right? Because I think everybody knows that, and there's a lot of places that have that too. I think people here like to innovate. For example, well, we're in a cutting-edge technology industry. There's a lot of challenges that haven't even been solved yet. It's not like you can go to a book and find out how to solve, I don't know, like faster consensus algorithms. There are some of them, but not all of them are like could fulfill the requirements we have. So we need talent that is also able to think about challenges, unsolved challenges, and say like, I will try to do that. I will, go there and look for solutions even where there are none yet known. And I think in Costa Rica, we have a lot of people like that they want to try to do new stuff, stuff that is at the edge in their own industries, right? At the edge of what technology is capable of doing. So that's one of it. The other one is, as I mentioned at the beginning, for us, the ecological aspect is important, very important. We're moving from proof of work into proof of stake as a consensus mechanism, just because that allows us to not use a lot of energy when validating transactions in our network. And of course, Costa Rica is a very, as we all know, green and sustainable country. So it's basically consistency, right? It goes hand in hand with what we believe as a project. So that's the main reasons why we are here.
Thank you. And also you're in Santa Teresa, an amazing place in Costa Rica. You have operations there. So talent, sustainability, a lot of the things Costa Rica promotes as part of their value proposition. Marcela, Ebanks recently opened operations in Costa Rica. Share with us your experience and why Costa Rica as part of the strategy.
Like Central America, Costa Rica has led the e-commerce in our region. Our internet penetration is very high. We are talking about more than 18%. Also, the people that is banked, population banked, we are talking about more than 17%. And also, like we saw the behaviors from Costa Rica, like Costa Rica likes to buy online. We have 27% of the Costarricenses buying online, and those are like a really nice combination of internet penetration and online consumers that creates a perfect storm to digital commerce players. Like, you know, from being from Central America, we have all these kind of attributes that help to elaborate this example as a caso de éxito. I don't know how to say it, but I think Costa Rica has all these kind, as Jeff mentioned it, we have a high level of education. There are many professionals. There are people that is not afraid to buy online. So this helped very much to understand how countries from Central America and Caribbean are starting to this evolution of digital transformation and payments.
Great, so glad to have Ebanks in Costa Rica. Finally, Tiago, so from a fintech perspective for Mastercard, how does Costa Rica fit in all this strategy for your company?
Great. So I will not touch the topics that Jeff and Marcela well covered, but I will focus on maybe two big blocks, right? The first one is the evolving regulation. So we saw this happening in Brazil, in Mexico, in Colombia. So there is no specific fintech regulation yet. But as we see antitrust and consumer protection laws and personal data protection, AML, QIC, so all of this environment is being set to then what we hopefully believe that will be the foundation for a specific regulation. This is usually set to accelerate a lot the innovation in the markets where we have this established. The other piece is how we, again, back to the power of collaboration, how we see the potential business with the existing 25 identified fintechs in Costa Rica specifically. So how we are partnering with them together with processors like Evertech, like Tutuca, Cacao, and Galileo, as well as other banks, right, that could play a being sponsor role. So Banco Nacional, Coopenai, Copa Servidores. So we've been developing this type of alliance to facilitate their entrance in the market. So I think that's another opportunity that we see by creating these connections and, again, playing this orchestrator role, connecting the dots to, at the end of the day, remove all the barriers for them to test, to launch, and to scale their businesses. Great.
So we see a lot of convergence between all of these companies, and definitely Costa Rica acting as a strategic partner. I love to see how Mastercard is looking at the fintechs in Costa Rica, how Nimiq is using different locations, specifically in Santa Teresa, to find developers and actually develop software out of there and create a NIM community. And Ebanks also exploring Costa Rica as part of their strategy, being a Brazilian company and investing in Costa Rica as part of their hubs in the region. So definitely a lot of opportunities for other multinationals to look at Costa Rica as a potential location for any of their operations. So let's move to the questions. I think we've been receiving some of the questions from the audience, and please don't be shy. We have very good speakers that could answer any questions in terms of the payments and cryptocurrency. So please shoot your questions. We will be happy to answer them. So I have a first question for Tiago here. And do you think Costa Rica could follow the Bahamas supporting digital currencies? Will this fiat currency ride over the MA or any major network rails?
So we have a really close relationship with most of the central banks in the world, and we know that around 60 to 70 are actively exploring opportunities in that sense. I'm not 100% sure about Costa Rica specifically, but for any central bank that is trying to find more efficiency, traceability, transparency, and cost-effective programs, that's for sure one of the initiatives that they should be pursuing, right? Related to the fiat specifically, the way we are enabling the crypto card program today demands almost real time or a pre-conversion of the CBDC to local currency before transaction with the card, right? So it's at the end of the day for the consumer, it's a normal local currency transaction. The thing is, by the time and until the end of this year, we are planning to allow new currencies, always stable coins or CBDCs, to run directly through our network with selected partners this year, and then enhancing the value proposition in the upcoming years.
Thank you. I have here another question this is for Jeff. So we're living a global pandemic, which has changed how we interact in our physical world. Technologies are getting better and much easier to use. What else is needed to happen to see more people using cryptocurrencies as a regular form of currency?
That's a good question. I think there are two main challenges right now, besides, of course, the usability challenge, which we already talked about a little bit before. The main one is stability, and I think Thiago already talked about that too. Most merchants and customers don't want to pay in something that may change its value, from one day to another. Both because if it goes down, then I lost money, right, in that transaction. But if it goes up and I was paying with that, then I also lost money. So I would rather, save that and wait until it goes up. So I think that's one of the main challenges. The other one is that we have a chicken and an egg problem. Basically, there is not enough places where you can use cryptocurrencies right now. And because of that, then there is not a lot of attractiveness to use them as a form of payment. So I think that's the other challenge that needs to be addressed. Once enough places start accepting it, and that may happen actually not directly, but for example, through Mastercard or through PayPal or other big players that are announcing things in that area, then we can start seeing more adoption, right? But until there are more merchants accepting it, it's going to be difficult. So I think those are like the challenges, if you ask me.
Yeah, definitely a lot of challenges in cryptocurrency. I think more is happening in investment rather in payment methods, but definitely at some point we will get there. But definitely at this point is more seen as an investment. And well, even if we can pay a Tesla with crypto now, but we need to see how that moves forward. So I have a question for Marcela. Are there any options right now, or are there any digital payment systems that can allow for a less expensive way to transfer money in and out of countries, specifically for Costa Rica? Many of us that have customers in the US and employees in operations in Costa Rica, it becomes very expensive wiring money in and out with charges on both sides of the deal that seem sometimes unfair. What solutions would you recommend right now for both individuals as well as companies? Pretty long question, but I don't know. You have it there on the chat.
Cross-border efficiency, Marce.
Yeah, we have to understand that for send money and translate money, it requires a lot of members of the ecosystem. It's not like it's something that is easy or not that expensive in some ways. We have to understand that all the knowledge that came behind a company is how mature is the ecosystem in our countries. I think we are starting, as Thiago mentioning, we have to work together with Banco Central. We have to work together with the fintech ecosystems. We have to work together with all the players to try to have the more efficient and more competitive rates to can send or receive money from Costa Rica to other countries. So it's something that we have to understand that in Costa Rica we are beginning. There's a lot of players that are involved in transfer money, and how that kind of money, or how we can transfer money from country to a country. This is something that is very difficult to understand and difficult to get, but I think we are working together just to have more options in our country.
Thank you, Marcela. Very interesting, definitely. Thank you for everyone for posting your questions. And we are at the end of our coffee talk. So thank you, Tiago. Thank you, Jeffrey. Thank you, Marcela, for joining us today. Definitely very interesting conversation, and we hope we can do another one so we can go into more of these topics. And thank you to our audience for being here and joining us. Please follow us on LinkedIn, actually on CINDE Costa Rica. You can find us on LinkedIn, also on our website, cinde.org. You can find more information about Costa Rica. And also you will receive a copy of the webinar, which has been recorded, so that you can look a little bit deeper on the answers of our guests. But it was a very interesting conversation, and thank you. And please join us on our next virtual events that will be coming soon. So thank you and have a nice day.